Good morning, everybody. This is your S&P 500 setups for today. I'm sure all of you heard the term the fear of missing out. I'm going to explain to you today how you get trapped and how you get pulled into that. So, firstly, we just need to take cognizance of this level that we're at. So obviously we've flown through all the other levels that we've been looking at all week. And this was a key one at 52.70, 52.69. So basically, fear of missing out. And I'm just going to go down to something like the hour quickly just to show you. Been sitting on the side for quite some time now. In fact, pretty much most of last week and this week so far, and haven't made a trade. So when you're in a situation like that, you tend to come back to the charts in the early morning and you look at hindsight, you think, oh yes, I should have got in on that trade. I should have got in on this trade. On Tuesday there was an opportunity. I should have got into it. It was against the rules, but you start looking at it and then you start measuring. Start going, I could be in for 770 points if I'd only just done it. And then what you tend to do is sit through another day and then you think, no, to hell with this. I'm just going to do it. And you jump in. And when you do jump in, the market tends to hit support or resistance, whichever direction it's going, and then start going against you. And because you're annoyed, you typically don't have a structured approach, so you won't have a stop loss, or you'll have a stop loss where you'll say, I'll be safe. I'll get in here and I'll put my stop loss 400 points away, so I'll be fine. Market then tends to come and take you out. So it's all structured in such a way to take you out. So be very careful of fear of missing out, and that's exactly the situation we find ourselves in right now. So let's just look at the charts and then it'll make a little bit more sense. So there is another zone of support here, and you can see, looking left, you can see where that zone is. Now overall the trend is still up. So when you look at the 8 hour, this is a strong uptrend. One pullback, so ABC moves, so right, so one down, one up, one down, so A, B, C. Well, there's many different strategies, the strong move like this, how the pullback is structured. So when you look at it like that from a telescope view, so in other words zoomed out completely on a higher time frame, you're like, okay, there should be an opportunity coming up shortly to buy, and all the way down you can see where the different opportunities are, and there's some strong areas of support. There's another one further down here. So 51.94 or 5200, 5220, and then we're hitting this 5240 at the moment. But the minute you start getting in on the lower time frames, that's when it starts, the fear of missing out starts coming into play. Anyway, let's look at our oscillators. They are pointing down. They have separated. We had it yesterday as well, but this is really looking, it's looking like it's in a downtrend at the moment. We are breaking through structure. There's a lot going on, and I just want to put that rejection on because this rejection here is now in play. So let's get down to the levels. So look left again on the 3 hour, you can see nice grouping of our oscillators quite far down. That is extremely oversold. We do have a crossover, we are below the 150 EMA at the moment. So looking at the 3 hour, we're looking, well, there could be a trend reversal. I'm still not convinced, and I'm still quite happy to bide my time, and I think that's the message this morning, is really don't get fooled into jumping in because now you've missed out 2 or 3 days of trading and you feel you have to trade. That is what the institutions want you to do, because then it's far easier to take you out because you're making reckless moves. So 52.42 is a very strong area of support. I think if I remember correctly, we do have some daily resistance, or it was a daily high here. So that is definitely something you need to pay attention to. And then just below it, obviously, there is a whole, I don't know what you want to call it, but let's just call it a zone. I was going to swear, but that's a zone of support right on a moving average. And again, look at this on the daily. Strong move up, deep pullback, strong move up. It's not even a deep pullback. It's still a very shallow pullback in context of the bigger move. So if we get down to the hour, and this was one of the areas I was looking for rejection, not necessarily looking to buy off here, but just as a rejection. You took a bit of rejection, but then obviously going into close, we plummeted quite quickly. And I was actually considering this on the lower time frame. I'll give you now what I was looking at. There was the swing high, sorry, the swing low, but for all intents and purposes, we would have needed to get above that and come back and test it before looking for an opportunity. It did break a trend line, as you can see, broke up, but that looks like it was a fake out. And then we continued down. So another big day yesterday. 1% fall in the market, 500 odd points. And when we look at all the moving averages, this is a very strong downtrend. So there's no two ways about that, and you're not really getting the opportunity for it to come back and test structure for a move down, which is where the frustration comes in for a lot of retail traders. So if you have a look at, from our perspective, using my strategy, we were moving down, we're looking for pullback onto structure, so any break we were looking for. So I'm just going to use one level here so you can just see. So that would have been our most logical level. You can see we didn't quite break through it, and we're just hovering along it. Then we broke. So hindsight's going to say, you know what, I should have taken that. I should have just taken a chance here, put my stop up here, right? And then you come down to the next level, and then you look at it and say, it didn't quite get there, but I should have just taken it. It's clear as daylight. Look at this. There's a big engulfing bar there. And then you would come down to there and say, damn it, man, I should have just taken this. Why didn't I take this trade? And so it continues, right? And the more that happens, and then here, you can see this level here, which is a fairly big level. 1 attempt, 2 attempts. I should have just taken this. I've got to move my stop up here and just, not worried about this. But you would have worried about this. You definitely would have worried about this consolidation. And so it continues. So anyway, hindsight's always a perfect science, but use that to teach yourself of potential situations. So granted, this was an opportunity here. You would have needed to be sitting watching the chart, 50-point stop loss. You would have got out when it started doing this because it started looking like a rounding bottom. So you would have only made 60 points. And then again, if you'd taken that trade and made 60 points, woke up this morning, that's all the way down here, you're again going to be going, hey, stupid. You should have done this. You should have done that. You should have done that. Don't do that. Just get in. But things falling. You need to get in. Sound familiar? Anyway, so that's how fear of missing out always affects you. So, 15-minute trend is down. There's no two ways about that. But we want to be rejecting decent structure so we can get decent reward. This to me here at 52.40 is a very strong area of support, and I just want to check the weekly here as well. There's nothing much on the weekly. The weekly level of support is going to be at 5200, 5194. No fractals, so closest fractal is all the way down here. So it needs to build, it needs to build a base here. You can argue that it's looking like a double top, but we would need to drop below this swing low here at 49.26 for that to be a double top. This trend is way too strong for me for that. This is too structured. Deep pullback, big move up. This is not quite a deep pullback yet, and the week's not over. So I'm still very much sitting on the side, and to be honest, I'm leaning towards just sitting on the side for the rest of the week, Thursday, Friday, and pick it up again next week, fresh start, clean set of eyes and don't have any of these niggling I gotta get in thoughts that may still be in my head. So shorts, a rejection of 52.69, okay, and that's kind of something which I think you will probably get taken out on. So it'll probably be 52.74, 52.70, somewhere around there for a rejection for another move down. And I think you are going to find support at this 52.40 area. And if I just come to the 3 hour, you can see this is a very strong zone of support here. Now we're coming up to, see there. So between 52.43 and 5200, there's quite a bit of support going on. You come to the 8 hour and look a little bit further left. Look at this. So I'm pretty confident that you're going to see buyers come in rather than sellers. I think this is just easing off, allowing us to get a better opportunity to buy into this. And for me, from a long-term investment perspective, this is starting to look like an area where I want to start accumulating more stocks. Anyway, that's kind of my view at the moment. I'm not willing to commit to a trade just yet. Between 52.43 and 52.21, I'm actually more in the frame of mind that I'm looking for a long here. A very small position, and it's going to be going against the hour, against the 15-minute, but we are coming up into a zone of very, very strong support. So I'll be watching this area very, very closely. Do not want to be jumping in short there. And as I said, shorts would be up here, but I have a feeling that's going to be a short scalp rather than a continuation. So that's kind of my view at the moment. Not quite what we're seeing on the charts, but this is just looking. It's just looking like a situation where we need to be paying attention, because if you just fall into any of the traps that are being set here, you're going to get burnt. I think also that it's not just going to touch and then rally. It's probably going to form a range, some form of structure, bounce around, maybe even squirt a bit lower down, find one of the other levels just to take out the last lingering weak hands that are sitting in. So there'll be a lot of people that are already long, who jumped in long without stop losses and praying that it's going to turn. But it just drops a little bit further. That just puts that fear of being wiped out comes into play, and then people start jumping ship and dumping their longs, and as they do that, it'll push it down onto structure, and then the real buyers will come in and drive us up. Anyway, that's kind of my long-winded view this morning. I think just be very careful. Don't get suckered in at the moment. I am still sitting on the sides, and we will wait until I see some decent structure that indicates we are either going to continue to the downside, or we are going to find some support here and move to the upside. I'm leaning towards support first for a move up, but that's just me trading the 8-hour chart right now. Anyway, that's kind of it for me today. I hope it helps, and we'll catch up with you tomorrow. Cheers for now.